Why I'm somewhat pessimistic on stocks. Now, I own stocks. My portfolio is heavily towards stocks, just FYI. But I'm only 54 years old, amigos. You know what I'm saying? I'm 54. Look, I'm going on 80, I know, but still, I'm only 54. I still got a full head of hair. Believe it or not. I do got my pearly yellows, but I should be heavy in stocks. I'm young, and I do believe stocks will outperform bonds in the long term. I do. But I don't think they're going to do like a lot of people think. Here's why. Did you know that from 1910 to 1976, both bond and stock market had a real return, the real means net of inflation, of less than 2% from 1910 to 1976? Think about that for just a second. Over that 66-year time, if you invested in stocks, your real return is like 1.63% a year. If you invested in bonds, like 1.25%. Real, again, means net of inflation. Over that 66-year period of time. Now, from 1982 until today, stocks have just gone insanely well. Bonds have done pretty well from 1982 to about 2011. Then they kind of floundered, and then 2022 they got crunched. But we've had in the last 15 years, stocks have trounced bonds, just like they did in 1948 to 1968. So you have to think, what caused a dramatic run-up for stocks starting in 1982? You can say attribute to Reagan, that's fine. But what caused that? Well, I think it's corporatism. It's not capitalism, it's corporatism. I.e., it's a stock owner's economy. Leverage buyouts, heavy debt, heavy share buybacks, reducing dividend payouts. And so you have this corporatism that has rewarded risk-taking. Essentially, we've said, hey, if you make profits, you get to keep the profit, but if you fail, we'll socialize the risk. Privatize the profit, socialize the risk. So the people at the top have done incredibly well. Now, we have too. I'm not denying that at all. But the corporatism of the last 40 years, starting with Reagan, essentially allowing monopolistic practices, allowing all kinds of things to increase shareholder wealth. And again, I have benefited from that, as have you. Can that continue, though? I don't think it can. I don't think it can, and I don't think it will. I think we're going to probably go back to the days where we have more regulation on the monopolistic powers that these companies have from both sides of the political aisle, Republicans and Democrats. Lena Khan, Joe Biden's head of the FTC, I'm a fan of hers. There's a lot of right-wingers, Matt Gaetz, that likes Lena Khan. He called himself a conservative because she's regulating these corporate entities, did not want Albertsons to merge with Kroger, I think it was, and things of that nature. Trying to reduce the power of Google and all this stuff. And I think after what these guys did to Trump, I don't know how you can be a Republican and not say these companies have too much power. Microsoft, Google, that's just that kind of company. Never mind. I mean, the railways, I don't know, I'm just throwing it out there. But anyway, so if you have this kind of thing now, you're going to start to say to yourself, what does that do? Well, essentially, it's going to limit, potentially, the massive growth in share prices, potentially, that we've seen under Reagan, with a corporatist increase in leverage buyouts, again, as I've said before, Michael Milliken, all these different things, dude. All these different things. Massive leverage, massive short-term gains by offshoring, outsourcing, massive, 1099 contractor economies and things of this nature. Massive stuff like that. So we've had this run from 1982 that people seem to think, oh, that's typical. It's just not. From 1910 to 1976, where did I get this data from? Well, I got my newspapers.com subscription. I looked back into it, and there's an article from a professor from Iowa who's since dead, but he was a pretty well-known finance professor, citing research that Roger Ibbotson, of all people, had written in 1976, another guy, I think, from Northwestern. The real return of stocks and bonds was less than 2% from 1910 to 1976. Did you know the real return of bonds from 1970 to 1976 was higher than the real return of stocks. Pretty interesting, is it not? Did you know of the 7 decades, 1910 to 1977, of the 7 time frames, 1910 to 1919, 1920, 1929, stocks outperformed bonds net of inflation 4 times. Bonds outperformed stocks 3 times. In fact, a couple of those times, stocks had negative returns, like 1930 to 1939. I forgot what the other one was. I can't remember. Anyway, a couple that had negative real returns. Bonds had a couple of years of real returns too, negative real returns too, but not anywhere near the stocks' real returns. All right, negative real returns. It's crazy. And again, if you take out the 1948 to 1968 time frame, the bonds and stocks have basically traded back and forth until basically the last 15 years or so. Anyway, I just don't think you should expect these huge gains in stocks. I think we're going to go to a pre-time frame of the Reagan years. I think these days are numbered. I could be wrong. And frankly, I hope I am, because I still have a heavy presence in stocks. But I do think at the end of the day, stocks will give me a real return better than bonds, which is why I'm still heavy in stocks. If I was retired, I might rethink that, though. I might say, something, I'm going to be a little bit more exposed to bonds, because I think bonds will give me stability and give me a decent enough real return that I could lay my head down at night. All right, love to hear your thoughts. God bless. We'll see you.